You talked a lot about it now, how to enter into an opportunity or a deal. What about the exit point? How do you generate liquidity? How do you think about that?
Oh, it's hard as hell. Um, we've been somewhat fortunate because it's in our DNA. So in that first fund we had, it was 7 years old. We had 37 exits. We're thinking about exits as soon as we enter, which is not a very nice thing sometimes, but internally we do think about it. And we are transparent in sharing that with companies as well, right? So we will say to companies, we are not a forever investor. We will be someone that goes on the journey for you, oh, sorry, with you, for you for 3, 5, maybe 6 years. But we want to be able to recycle the capital at that some point in time. You've got to do it somewhat respectfully. Now, as it turns out, if a business hasn't done well, bad luck. You're not going to get the exit. But if a business has done well, there's always another investor that wants to go on that next leg. So you've got to work hard with the company, with the management, if there's an independent advisor, to get out. Right. So we've had situations where a business is doing well and there's a primary capital raise that's happening. We will then tag along and say, hey guys, we've had a great journey. It's been 4 years. We'll sell our secondary at a 15-20% discount to your primary raise if you would like that. And if for the new investor, they're reducing their entry price. Right. So that has worked very effectively for us. Conversely, if you've lost conviction in a position after, say, 1 year or 2 years, and there is a primary raise that happens at the same price as what you enter at, again, we'll say we'll sell ours at a 30% discount, which is lower than what we entered. But if conviction's lost, you've got to move on from it. And I think part of the genesis for why we do this is, one of my partners in particular, he was a very successful sales trader at Morgan Stanley. And, this is how he's taught us to operate. Even though in private markets, it's very hard to exit, you can use the psychology of public markets in private markets occasionally. So we do it, not constantly, but we do it occasionally. The other thing that is important as part of that process is continuing to talk to the board. Like, the board can be very influential. We're always discussing it with them. Sometimes they're like, "Oh, these guys at Alium, they're a bit edgy, racy. They're looking to get out." But if you've been honest, open, and transparent with them, and it happens after 18 months, we didn't lie to you. Right? We told you we wanted to move on. You've created the opportunity for us to move on, which is great. And then the final thing is finding an independent advisor does help. So if you remunerate them with a 3, 4, 5% fee to sell our position, they work damn hard. So they work on behalf of management and us, the seller, to
Hmm.
find someone, right? As I said earlier, the supply demand equation's enormous, right? There's so many companies, but there's also so many investors, right? So the investors span from funds like us, venture, private equity, family office, institutional, all kinds of community sets. So an independent advisor is very helpful towards getting the exit should you need it.